Hello everyone, welcome back. So in our previous video we have seen this one, this US30 run. It was a beautiful trades. So as you can see, we had a sell here down there, and then our stop loss observed targeting down there high the bodies, corner of the bodies, TP1, TP2, actually targeting this one, and of course TP3 too. Okay, that's how you measure the typical black box, right? How you determine your target. But before that, we had this one, 2, and 3. Bam, down there is a sell. That bullish candle right there. Okay, and then you measure your TP, and since TP2 is not hit, you sell that one again. There's another sell and stop loss out there. Okay, so that's exactly what happened. And before that, we had a buy here, 1, 2, 3. That's a buy up there, and then down there stop loss. Unfortunately, the price came and got you out of the trade. So it doesn't matter because we have two sales, this one and this one up there. Okay, beautiful. And nobody knew that it would completely collapse and change the course. I mean, it is crazy. So this is our loss and this is our gain. Okay, that's a huge difference. There is a huge difference. And then the other thing is this one. Of course, this is a sell down there. Stop loss up there. I mean, these kinds of liquidity hands or these kinds of stop hands, they do not always come back up there. Okay, for not even, they don't even come near the second body's close and open. Do you see what I? Most of the time you would see the third model here. Why? Look closely. Look closely here. Look the body and the body, right? So the candle, the third candle traded down, took the opening of the second candle. So the third candle broke, took the opening of the second candle. If you sold up there and put your stop loss up there, you would have been out of the trade. Because as you can see, the market even traded up and took the close of the second candle, right? So if that was not the case, we would have put our stop loss down there. And there is no 5% required at all. But they sometimes come up, take the high, the break the closing price or the opening price of the second candle. It is always the second candle that we have to be careful of, okay? That we have to see, we have to follow closely, okay? The second candle is the most important one, right? Then what happened here? So the price might just come out, take the high even, the wick and the close and the high are different, okay? The high includes the wicks. The close can be below the wick, okay, or above the wick. I mean, if you look it down here, it is above the wick. If you look it up there, it is below the wick, right? Then the price, most of the time, will swing, will visit this place. So we don't really have to put our stop loss up there at 2.5%, not required, because yes, sometimes they come there. Sometimes they come there, okay? There is no joke, but not always. So you can even put your stop loss up there by giving a little bit space. You can also put your stop loss at the close of the second candle or the body of the second. If you are buying down there, the body, if you are selling up, sell the body of the second candle. Okay, so it is really it would really save us so much money if that theory was amazing. I mean, if that theory holds some water, but it's not always. It does not always work because the price might come up there. And I've showed you so many instances that the price came up there, made the equalize, even took the high, and then finally collapsed. And there are instances that we sold up there, right? At the retest because TP2 down there was not hit, so we know that it is that swing low is made to entice people to put their stop loss down there. And there is a stop loss up there, they come there and take that high, right? And then dump and take the low. Okay. That's why we are seeing sometimes as a stop artist. Okay. If that was not the case, then we would put our stop loss at the bodies. So we can really put at the body. We can also put it a little bit high. If you want to be safe, you have to put it as the next grid. That is a 2.5%. Okay, that is a 2.5%. So that is a sell. And then down there we had something nearby. Look, this one, beautiful. Why? It touches the second model touches the 68.3. The 68 point is at the 63, the 68.6% of the first candle. That's good. And the third candle traded below the 50%. I mean, near the 50%. That is even better. Okay. So that we don't, but actually we don't buy. As you can see, all I have to do is buy up there, right? Stop loss down there. Look, that's the risk. And this is US 30. Remember, US 30. A lot of money here. So a lot of money here at risk. So, but we can use this for TP, TP1, TP block there. Look up there. And look, the dump. It is crazy. Then TP3, look what happened. It collapsed completely down there. Right? So that is for TP projection. This one not for entry. I want to enter. If it didn't hit TP2 and come down there, if the price came down there, then I will put my stop loss down there. This is my risk. This would be my potential profit. Okay, that's beautiful. That would have been great. While doing the second model, I would have bought something. But since this is risky, I'm not going to involve myself in this trade. I will wait for the next setup. And then what happened is another black box. Is that a buy? Yes, there is a buy. Stop loss. Okay. Yeah, look, remember the thing that I told you. You can even put your stop loss at the body of the second candle. Look, price never came back. Right? Most of the time it is a half of the middle of the second candle and then that's it. Okay. If they come down there, that's a discount area. That's a discount area. So they don't do that often. Okay. So it is safe to put it down there, but it is not entirely safe. It is not always. Okay. It is safer to put it at the wick. Look at that, yeah. The third body is the third candle's wick, not the second candle's. And then it is even safer to give it a little space. But you are sacrificing pips risk. You are increasing your risk, right? Alright, let me increase this brightness again. You can see the sun is out, so here, as you can see, if your stop loss is down there, that is the safest place. The safest place. The price will not come down there and break it unless unless we are changing the program from a buy to a sell. I just put these alternatives options for you to see it for yourself, okay? By going to trading view and opening any chart, any chart. I didn't uh, backtest it on the stock market because I don't like trading stocks, you know. They are volatile and they you don't even recognize the black box. The black box is there, bro. It's always here. They have to collect orders. Otherwise, in this case, no one will buy. Big money will not buy in this case. Only they buy here. They already bought here before the price moves. Okay, so even the stock market is huge, right? So it's not the fun like the forex, but the stock market has a decent market cap. I mean, it has huge billions of dollars. Okay, so like the Tesla and AMD, Nvidia, right? I don't really trade them. I don't really follow them yet. The stocks, but they I don't like it at all. First of all, they jump like this. After opening it, the next candle is up there. Huge gap down. How do you determine what the hell is that? And sometimes huge wick bar. Everything here is gone like this. And they trade like a small candles and bar. So great. It is down. It is down. It is not used for day trading. It cannot be used for day trading. I mean, for long-term trade, you can enter the low at the low and then wait for some years and take your investment out. But for day trading, it is bad. It is bad, really bad. So this is when you measure the bodies for your TP, TP1 and TP2, TP3, as you can see. Okay. So TP2, you already know we take the options 30% off, 30% off, and you wait. So in this case, it hit your stop loss. Okay, it hit your stop loss. Look. Maybe it could be my measuring mistake. Maybe TP3 is up there too. Okay. Okay. When you measure the bodies here, TP1 is most likely around it. TP2 a little bit up. Yeah. I think TP3 is up there. Okay. That's where you trade or stop your entry. You take 60% off on both of this 30% TP2, TP3 is 30%. That's 60% off. And now your stop loss up there. Simple as that. If you want to be conservative, you want to save your money, you want to be risk free, all you have to do is after the price hits TP2 up there, you trade your stop well at entry, at, at your entry level, at break even. That way the price can do whatever it wants. Then the bigger black box from the one, this one, huge this week. 2 and 3. So finally they broke it down there. I'm not selling, bro. Stop loss up there and sell down there. That I will not risk, never risk that much money. Now determine your TP by using the body of this TP1, TP2. It's down there. Is it? So what does that mean? It means I'm not gonna sell up there. If TP2 down there was not it, if this week was here and then traced back up without moving down, I would have entered the sell up there and it would have a beautiful sell back. Most likely we would be dumping down. but unfortunately it already hit TP2, so no thank you baby, no thank you. So dab in a great trade. Then here another black box formed there, 1, 2, 3. This thing broke up there and so close down there. You measure the body, you measure TP1, TP2 is above my screen, so I can't even fathom it. I can't even. So this thing has a potential to move up, right? So which means I want it to come down there. I want it to come down there. Okay, below there. Below there, that is a beautiful golden zone. That's a golden zone. It is not a silver zone. The silver zone is this one. The two bodies. The silver zone is found where it is where two first two candles are placed. Their bodies. Their wicks and your stop loss, the space between the 2.5%, the wicks is gold. The golden. It is gold. Risk wise, it is beautiful. Precision, it is beautiful. That's why it is called gold. This house or the silver zone also has some precision, but risk wise it is down. It is just too much risk. So which one would it be better to buy here or to buy down there? Bro, buying down there is better than buying here. What are you talking about? So this is the best price. So we want it to come down there regardless. And then I'll put my stop loss down there. This is my risk. My profit is gonna be under the sky, bro. A lot of money. A lot of money is freaking certificate. Even if I enter 0.1, it would be, I don't know, it would be $50 or something. It's more than $100 at least. The mini lot, 0.1 lots would be $100. I'm telling you, bro. I'm telling you. So this is it. Let's go to the newest. This is dollar again on 5-minute time frame. So really the sale started up there. Okay, 2, 3, then 1, 2, 3, down there. The sale started down there. Measure your TP. TP is most likely down there, not hit. So yeah, if it is not hit, I'm gonna say that big block. That this block, I will say it. This one, okay. But then I'll interpret off of this sale, follows the same way, and then target TP2, TP1, TP2, okay, beautiful. That is beautiful. Market changed gears, changed direction, and then here we have this black box. 1, 2, 3. That's a buy. Stop loss at the body if you can. If you want to count it as a wick or a little bit down here. You measure the body, TP1, TP2. So TP2 is there, then the market dumped. So there, this is another black box. Measure the TP, TP1, TP2 is most likely down there. So yeah, TP2 is not it, which means we're gonna wait. But before that, we found this one. Beautiful. It is better to place your surplus up there than placing up there. Okay. Risk wise, this has less risk than this. So I'm gonna use this black box. Okay. Anyways, the market also went up and you put stop loss. If your stop loss was here, then you would have lost less money. Okay. So that's why we are sniping. That's why we are snipers. We're not gonna use the whole thing as a black box like the classical black box. Okay. So here that was a safe. A little bit of profit and finally change the direction. Don't touch nothing. So up there what happened? Up there a buy happened, but I'm not gonna buy that one. Why? It is because based on this, yes. If it was not it, I would buy this 30 million. Okay, this is 30 million. We broke, then we broke the upside. So this retest right there is a buy. TP, I mean stop loss down there and potential this risk then reward would be up there. Okay, reward would be up there. Yeah, just like I told you. Just like I told you. Look, I didn't see that shit right there. I swear to God. I mean, now I didn't notice it. Okay, I've seen it before, but I didn't notice it was. What I was there was about telling you right now, just now, I was telling you that was a buy. That's a buy. I told you that that's a potential reward, right? A profit. So I told you I would never buy that one. Look at the risk. Than risking this much. There is a huge difference between the risking this one and the risking this one. There's a difference. Okay. And as you can see, that is what happened. That's exactly what happened. So your buy down there is still running. Okay. Because TP3 was not hit, which means you are not touching your stop loss. You let the market run. And as you can see, this is a 5 minute. The 5 minutes, which means you can sit for hours here. Okay, it's not a 4 hour time. Alright, then what happened? Then what happened? Right there, we found another black box regardless. That was not a sale because the 2.5% was not broken, so you can see that one. If the, my god bro, it doesn't always work, but if we would have used the second candles closing or opening price, then we would have intraday sale up there. But sometimes the price acts like a freaking damn, damn stupid. Like, it is stupid. It's just stupid. What is the point of moving up and down around that? If you are selling, you are selling. That's it. Just manipulate one time and then what's the point of coming back up again? It's crazy. It's crazy. Your direction is the downside, right? You have already accumulated. What is the point of coming back up again? You already gone down, right? What is the point of killing that? It's just crazy. It is not perfect. This the algorithm is not perfect. That's why you are seeing these kinds of out of the world actions. Like right action sometimes it's nuts. When the Paul speaks and when on the FOMC day, CPI, PPI days, these news days, and maybe they are tinkering with algorithms. That means they are tweaking it. Okay, they, they might be manually tweaking it. That's why it is moving like crazy to the one side, and it has no explanation of what it is doing. I don't think it is because of a black box. I don't think it is because of there is undelivered TP2. That manual intervention is They are artificially creating an imbalance. They are artificially creating a new system, a new direction. Okay, the market was moving down. It was moving down. All of a sudden, look, this thing was moving down. All of a sudden, but it opened up there. Look at this gap. From up there to down there, that is a gap. This huge gap. Look at this shit. So crazy. So anyways, I would have sold that one down there and a little bit profit. Okay. And then finally the price reversal direction. If you measure the wicks and the body, you get TP1, TP2, TP3. Okay. So it's time to trade it down there. It's time to trade. I told you if TP2 and your entry has the same area, you can target the TP3. Take partial at TP3 and you can trade it because it might return and be the third model as you can see it. That is exactly what happened. Let's go down. Yeah, this sales were profitable as you can see. This buy was profitable. This sale was not, was TP2 hit. I mean, it has to cross it. This sale was profitable and the rest is not a good entry because I might have intraday buy based on this black box here. TP1, TP2, targeting this area. If if the price had traded a little bit up and then collapsed it down to what? To fill this gap. This gap is an imbalance. It has to be filled. The market will not keep moving and moving without balancing this one. So it might come back down, balance this one. Right there, I would buy that shit, targeting this one. Stop loss. This is my minimum target. Then another target. Okay, that would have been great, but already TB2 was nailed, so I have no business here. I don't have business here. This is another thing how we do around 5 minute time frame. So as you can see, we had a black box. This one never worked out because it didn't break anything. This one it didn't break anything, so I'm gonna focus here as I said, and so close up target TP1, TP2 is rise here. Look at that consolidation. Crazy thing. Exactly how convenient. Look how convenient it is. Exactly at TP2, they started another black box, another order collection zone. This is an order collection. Then you use this shit to sell that shit again down there. Stop loss up there. So you can see from the examples I showed you. Look right there. They took the high of the second candle. Look, they took the high of the second candle and then dumped. So it is really good to put your stop loss up there, not at the body, not at the body, up there. Outside of that war zone. This is a war zone. Okay. The same thing, you already put yourself as the wick of the third candle. You put your sell down there, that the price has moved some distance, some pips. That's actually a beautiful thing. Your target is this TP1, TP2, take partials. I mean, it is near your entry, so don't take partial. Take partials at TP3. Then trade your stop. And then price move down further. You can't take partials without moving your stop loss. It is the same thing. Okay? It is the same thing. Not really the same, but it is the concept is the same. I mean, it is all minimizing risk, right? And maximizing your profits. So taking partials, putting your surplus up there will give you a lot of time because the price can come down there without hitting your stop loss because it is still up there, but it is highly risky because the price might come back up there, eating your money. Okay, so taking partials at key levels means at TP2, at TP3, at TP4, and then you take partials again. After TP4, you don't have key levels. You can add it yourself on trading view, but after TP4, it is better to trade your stock. Okay, I mean, yeah, it is better. You can put it at TP3. After TP4, you can put it at TP3. But you can also put it at break even to be safe. At break even, because the price might just swing and still down to your direction. So you can even take partials by putting at break even, taking partials, minimizing the risk, taking partials without trading also. So you actually have two choices. Two choices. Number one, trading your stock after the TP3 has been hit. Number two is putting it at break even after TP3 has been hit and minimizing your positions by taking partials. Once the price moves, you take partials, you cut. Once the price moves, you take partials, you cut it. Why? Because if the price comes back down against your trade, it will be less money there. You already took money out of the market. Okay, that's exactly what you should. This is the whole thing here. And this is gold on 5 minutes. The crazy thing here, I was looking at it. I was watching this unfold. This thing dumped like crazy. It broke the earth. You might think this is the last time, this is the end. Nah, think again. It at least moved triple. Three times this. Three times this. Three times this. It just continues melting. It just continues melting. It just continues melting. I don't know the reason. Maybe I didn't check the previous chart, the previous price action, the previous black box, but I don't know the reason. But here you have this. You have this. It makes point. It is. It has a point, right? Look, 50%. Look, 52, right? So right here, it has a point. I mean, this is the platform thing. It is TP2 is down there and it has to move down there. Right. So for this one, the same thing. TP, TP2, right? Right there. But for this one, I don't know what the reason is. Look, TP1 and TP2. Now I know. Now I know. For this dump, it is this one. For this dump, this is responsible. For this dump, this is responsible. For this dump, This is a responsibility. Do you see how everything falls into place? It is crazy. The one thing that didn't play out in our direction is this buy. That buy up there, it really killed us. I mean, that is not much money, but this is a risk, so it hit our stop loss. So based off of this, order internet is said. So my loss would be back. This is also coming. And the other thing, the beautiful thing here is, look at this. TP1, TP2, right? What does that mean? It means this one is a sell. This is a sell. TP2 was not just down there, but it is a freaking sell. Okay. So this is amazing. This is amazing. So let's go to the next one. This is yours, Nasdaq. It is Nasdaq, US tech or whatever. So after I did this, I sold it and I made money. So right, yeah, I sold that shit, right? But at that time I was trading the whole thing. It's a classical black box, and bro, I mean, it was not bad, but the stop loss would be up there. Of course, it was safe, but a huge gap between the risk and my TP would be down there almost 1 to 1. It is so crazy, and I didn't know where to put my TP. So it was horrible, bro. It was horrible. So anyways, let's see. We had a black box. Are we selling this? No. Only I would sell this quarter of my risk. If I was risking 2%, I would be risking 0.5. Why? It is because look, and it is Nasdaq. It is not a freaking euro dollar. Freaking euro dollar can be less, but Nasdaq is a lot of money. It's no joke. So that's a risk. That is 0.5% risk. So sold it, and then what happened? Another block was there, didn't break nothing. We came down there, but didn't break it. Then another black box here, 2, 3, right? Then the same thing, 0.5 load and 0.5% risk for this buy. TP1, TP2, TP3. Okay, roughly it is here, TP2 and TP3. Okay, that's beautiful, right? It's amazing. Did it look back? Went straight to our TP1. Then after that, I told you to trade or stop up at break even and take partials. Okay, take partials. So finally, the price pumped. I mean, I told you you have two choices. You can take partials and trade your stop, or you can also combine it. You take partials and then you trade. You take partials and then you trade. Then you would be out here. So another one, 1, 2, 3. What happened? Nothing. So there we had a safe. Okay. The crazy thing here is, the crazy thing here is, now our stop loss is upset, right? We sold it. We sold as our stop loss. Look, triggered. If it was at 2.5%, 5% is upset. 2.5% is upset. Halfway. Look at here, look at closer look, have a closer look here. This is a grid, this is a grid, right? With really right. That is a huge candle. It definitely it got us out of the trade. Because look, it traded. This is a grid, right? This is definitely higher. So this will get us out of the trade. This changes to a buy program. Definitely changes to a buy program here. And then as you can see it finally collapsed. Finally collapsed. Okay. So we got another sale. This didn't play out well. So that's a sell up there. 1, 2, 3. Sell, stop loss. Okay. Then this thing dumped. And see, actually, I don't think it really stopped. It should also come down there and move down. Because when you measure this, TP1 will be there, TP2, yeah, TP2 is nearly, look what happened. This candle wicked, made a wick, made a wick. They will never do such a thing all that, I mean, most of the time they do this kind of things. After hitting TP2, there will be some kind of pullback. And then if they want to continue, they will continue. If there is a reversal, most likely there will be a reversal. That's exactly what happened. The 5 minute is very it is very manipulative. It is very manipulative. If it was a 10 minutes, it would have been less. But as you can see, look at this. It's crazy. It is crazy. But what is the point of trading up again, bro? I mean, they traded. Look, they took the high with this one. They took this same high with this one. They took the same high again with this one, bro. What the hell? What is the point here? This high would have been enough. It's like 2 highs. You might say it is a 3 drive, but it is nuts, bro. This is crazy. It is crazy. Anyways, we do not miss this shit because as you can see, we made our money back. So we lost here 0.5%. We gained here. That's a huge move. We lost here, right there. We gained there. This huge move. 2 losses, 2 gains here. So it might be better to at least go to 10 minutes for 15 minutes. Okay. But it's okay, these kinds of things happen. And the most important thing is to is to yeah, is to preserve your capital, maximize profits. By the method I told you. So we are the black box here. This is called when it started to break. This is called when it started to break. I showed you that it went down to hell. So the black box, when we measure this cervical candle really traded to 23.6%, so that's what we want. Beautiful. The other one here, but they didn't break it, so we're gonna use it for TP projection. As another thing, so I told you about this, so no need to repeat. This is how the shape on 1 hour time frame. The shape on 1 hour time frame. And we had a black box in SL. SL here. Sell and stop loss. Trade it down. Measure your TP. TP1. TP2 never hit, so we have to wait. Finally stop loss it. Yes, our stop loss is it. So finally, we got another black box. 2, 3. Nothing happened. Resume. Nothing happened. Right. But down there, a sale happened. A sale. So the market changed. It is essentially the force model which was basically they made the certain force model. This is a black box. And look, they sold. They bought again. Finally, they sold. Okay. So here, what would have happened here is say that out of that stop loss out. Okay. With my stop loss, what does that mean? I am not buying again for stop loss. My entry up there, the risk is huge. So the only thing that I'm going to do is I'm going to wait for TP2 and for this price to come down. Okay, to come down there. And to show me some weakness to the downside. Show me some weakness and some weak to the upside. Right? Some weakness means some wicks and some bullish candles. Because I want this price to actually target P1 and so a lot of manipulations going on here. A lot of manipulations here. First thing is this order, they made this order model and I understand them why because TP2 is nailed, so it is okay. This is done. But the next thing is this one they sold, then they bought, and then they sold. Now I understand because as you can see, TP2 is nailed down here by using the force model, and then they made another box there. Okay. Vision one. Right. TP1, TP2. So TP2 right down, but I'm not gonna sell that. I don't trade the false model. I already told you so. Only way I would enter is if there is a new black box. It's just like this. I found a new black box, so but the risk is not great. Huge risk, so no entry. I'm sorry. I'm sorry. I will pass that one. I will pass. Okay, I will pass. The only way I would enter is if this price came back down here, broke, showed me the direction. Wow, yeah. The first thing is it really broke the upside, as you can see. If you use a grid, it didn't, but when you might say it didn't. You might say it didn't, but I think it did. I think it did. If that thing had happened in front of me, I would have bought. But not based on this risk, I would not buy it. It's very risky. The only way I would enter is if came back down there and showed me some bullish candle, I would have bought that. So the main thing here is to never risk more than what you can, okay? The price is not red at all. And this this is yes trade. This can be traded, but look, little profits or no lies here needed. I don't have to lie, it is just your stop. Simple. So there was no more black boxing. This can be used as a TP2 projection. Look, as you broke the upside, which means you will be waiting for this price to come down. As soon as it hits that place, I would buy it. Stop loss, risk, reward. Okay, TP2 is upside. Q1, TP2 is upside. Okay. There I would buy it, otherwise there is no trade in this. How's it doing? This is also card on one of them, and where the black box upside. Zoom in. 3, we broke down there. That's it. That's it, right? TP is TP, TP2. I just marked up. Just like this typical, just like it always does. And not always, but another time, as I said, I'm not gonna say that. Look, the risk is huge. I will not say that. If man, if it would have respected the second body's close, man, my stop loss would have been 0. I do not worry about the risk. Look, my stop loss, my entry. At the break of the second candle's body, the risk is involved. It would have been amazing, but unfortunately that is not the case. So it's crazy. This crazy. Anyways, we would do good loss interface. Good, but not be a great. Then we found another one. 2, 3. 1, 2, 3. So we try to break out. Of course, I'm gonna buy it. Stop loss. Triggered. I will not show that. I will not. Look, stop loss observe. Entry down there. Look, there's a risk. No entry. Oh, then another thing happened. Another thing here. 1, 2, 3. But this is a huge wick. This is it. So no buy there. There is no buy. So just like I told you earlier, if I would have used the body, look, it went down, would have entered this almost immediately it reversed direction. Which would stop us as a body, right? Would have entered the buy, would have been beautiful, but sometimes for the model happens and that will eat your money. So just like this one here, sell and buy, look, and I came back. So no sale, no, there is no entry. Only up there is sale, sell out, sell up, there is still one. Okay, and then next we have this founders one out and the black box. Save, stop loss, TP, TP to reserve, most likely that's why they retested it up there. And another black box. They broke it, but I'm not gonna buy that one because the risk is too much. Another black box. They dumped it. Stop loss up there and down there. The risk I'm not gonna enter. No thank you. Next one, 2, 3. That 1, 2, 3. I might save that one. Stop loss up there. Right? The price really went to TP2 also because we measure the TP for the bodies. TP1. Then TP2 is most likely down there exactly right there. As well as the price retraced back. So the price really reacted off of this black box. This black box itself reacted off of this black box. I will not sell that one because look, TP1, TP2 is most likely hit. No entry at that sale. I will not enter a sale right there, no. I'm not enter a sale over there. Why? TP2 is already hit. We can use requires TP1 and TP2. Okay. Then another thing happened is 1, 2, 3. So no entry at all. I'm just gonna use it for TP projection. Okay, project upside out. Project TP2 upside. Never hit TP2, right? What does that mean? I would be fine with one way. If I feel bullish candle. What if I see weak? Something like weakness. If it tries to move up, I'll be fine. But in this case, as you can see, of course there will be fluctuations, like it might make you interrogate because it will look like this one and after sometimes it will be a full bodied content. So how do you avoid that one? So another way to avoid is to wait. It's patience. Patience. If it moves without you in a speed, it is okay. Don't rush. Okay, if you want to enter a sale anyways, put your stop loss down there, it's okay that. Okay. And put it in. Potentially it might reverse, but if it is moving with a speed and moving down, full bodied candle, you cannot enter a buy. It's bearish. So that's exactly what happens on actually the third model happens. This is a graphics. And then bump, and then fall. So all I have to see is this price will come back up here. So now it sell up here, stop loss up here, aiming down here. Because if you measure the people down here, okay. So if I sell up there, it is profit. So we have lost money here. We took 30% off, but the price came back up and hit your stop. That one is still profitable, it is dumping here. So we trade your stop down and then you need to be out of the trade. This is one. Definitely this one will get you out. But okay, sometimes these kinds of things might happen and you have to be content with it, okay? So we have to avoid these kinds of huge range black boxes because they are simply huge high in risk. They are risky. These kinds of black boxes you cannot interact because this is euro yen. So here, as long as I can see that we have a black box here. Trade it up, I bought that. I would buy that one without hesitation. Okay, that's a buy. And then TP2 measure TP1 and TP2 gaps most likely hit. If it is not hit, then I'll buy it again down there. It already showed it sound for me, so I'll buy it down there if TP2 is not hit. Then finally the price collapse should hit your stop loss down there. Bam. There's another black box here. I'm not gonna sell that one, look. It's risky. Then we found another one. Entry stop loss. It's huge risky, but you can enter with 0.5 or quarter of which you would normally enter, okay? Quarter of which you would normally enter because you don't want to miss that move. Look at this shit. Moved like crazy. Right? supported again. It is since it is on TP2, you don't touch nothing. You take partials and you wait. Let's pump it again. So another block works here. TP1, TP2 is up there, hit. So now it's time to trail, or yeah, you have to put it, you have to at least put it at break even. Okay, at least after TP3. Then what you will do is you are going to take partials. TP2, TP3, TP4, 30%. So at three places you would take 90% off, because 30 times 3 is 90. Then it would be 10% still running. Your stop loss at break even. Then finally the price made another backbox here. 1 2 3 no break, 1 2 3 no break, 1 2 3 yes break. Why? Stop loss. Target is up there. TP1 and TP2 is most likely hit. TP1 is less here, little bit less. TP2 up there, so hit some kind of weakness, and I went to TP3, as you can see here, right? So it is partials. Now at break even. Right there at break. Then after that we made another black box, 1 2 3, then 1 2 3. I mean before that this is the black box 3. This interrupted the consolidation. This is small candle. So if that happens, then you're gonna use this one. And that's a buy. So for example there, by using quarter of what you would enter, or half of what you would normally enter. If you would normally enter one lot, you would enter 0.5. Since it is risky, and it is also good. It's also better enter zero, because there will be miss. You will miss it. So this kind of consolidation will give a lot of movement, a lot of dip. So you cannot miss that one. Look at the shit. Just like I told you, look at the shit. So not fun. So crazy anyways. That thing happened. We found another one. What you would normally enter 0.5, or half of what you would normally enter. Because you have this range, the price will do something else and will still climb, because you already know it is selling. And okay, you also just made everything obsolete. It made everything disappear with just one single candle. One single candle. It's so crazy. So next we have this dollar card. So I'll show you dollar card in the next video. I'm getting tired of it. So I'll show you the next one. Thank you for watching.